I am here with Stephen Pear, the CEO of BitPay. Really excited for this conversation. BitPay is one of the longest running Bitcoin companies out there. They've pretty much been there from the beginning of Bitcoin companies, and they have seen the Bitcoin landscape and the crypto landscape evolve. So Stephen is going to have a ton of incredible insights around building and running a business in this space. So without further ado, let's get right into this one. Stephen, welcome to the show.
Thanks for having me, CK. It's great to be on.
So, Stephen, tell us just like the little background story of you getting into Bitcoin, starting BitPay. How did it all get started?
Yeah, well, it was late 2010 where I finally sat down and read the Bitcoin white paper. I'd heard about Bitcoin when it first launched, but didn't, pay it much attention. But I was very fortunate that prior to all of that, I had gotten excited about something called DigiCash back in the early days, early 1990s. So I was very fascinated with that. I read The Creature from Jekyll Island, read the history of central banking and all of that kind of stuff as well. And with all of that background, I still sort of dismissed Bitcoin when I first heard about it. I think the headline on Slashdot at that time when the blockchain first launched was something like run an algorithm on your computer and, create money. And I'm like, there's no way that could work. But like I said, at the end of 2010, I read the white paper, got more engaged in like February of 2011 when it hit dollar parity for the first time, and started mining Bitcoin, buying up graphics cards and all that kind of stuff. And then started talking to my co-founder about that time, Tony. And, he and I had sort of reconnected over Facebook, knew each other from college. And sort of in the aftermath of 2008, we were, trading, doing some options trading and things like that. So, I pointed out Bitcoin to him. He kind of, I think his words were, you better sell all that before the government makes it illegal. Fortunately, I didn't do that. And we kept talking about it over the course of the next couple of months. And one thing led to another, and we started BitPay. And Tony wrote me a long, email about how we should make it easy for companies to accept Bitcoin as payment. And I think my response to him was like, sure, let's do it. That's how it began.
So, did either of you have experience in the payments industry prior to founding BitPay?
No, not really. We were in our careers, a decade or two into our careers. My background was mostly telecommunications. I did a little bit with banking software, about a year worth of work on a banking software platform. But other than that, not really any experience in payments.
So, I want to talk about, your experience kind of like learning what it takes to be a part of the payments game. But prior to
Yeah,
getting into that, I want to kind of stick to discovering Bitcoin.
yeah.
David Bailey, the CEO of BTC Inc., he told me that back in 2013, you were the most bullish guy he knew on Bitcoin. It takes a lot to be like,
Yeah.
obviously, like lots of people are bullish on Bitcoin, but if you rewind back to then when it was so much earlier, it was a lot more difficult to be hyper bullish. Tell us about how did you build up that kind of conviction in Bitcoin, and what was it like, being a Bitcoin hyper bull back then?
Yeah, it was really just, I guess, going back to my DigiCash, experience, my understanding of central banking and reading a lot of the, sort of libertarian stuff about, or the Austrian School of Economics and things like that. And then looking at and thinking about this problem of creating money, right? When DigiCash first came out, it was somebody somewhere, I heard some quote that said, there's this, worthless piece of paper with worthless ink stamped on it. And yet for some reason, people assign that value. And the conclusion from that was that must be an information system, if that's the case. So if it's an information system, we should be able to replicate that entirely in the digital realm. And you have to remember, back in the 1990s, we were still doing a lot with cash and Credit cards were just beginning to be used on the internet. And so it was, I spent a lot of time thinking in those days, like, how would you create money for the internet that didn't require like a centralized company to run it? And remember, DigiCash was, or I don't know if you remember it or even know of it, but DigiCash it used cryptography, but it was a centralized system. And so they ultimately went bankrupt, and that payment system went away with it. And I think that got a lot of people thinking, how can you create a protocol for payments on the internet that doesn't depend on that central issuer? And so when Bitcoin came along, and I finally, studied it and read the white paper, and, as a computer scientist, it was like a very straightforward, simple white paper, right? Got right to the point, and usually the best inventions, the best, sort of breakthroughs, when you look at them, it's sort of obvious in hindsight, right? It's like, oh, why didn't we think about this 20 years earlier? Why did it take so long? And so the attributes of Bitcoin, the fact that, there's a limit of 21 million, it was, a consensus protocol, and that all the participants, users and miners, enforced, that meant there could never be more than 21 million. And you could trust that. That's why I was so bullish on it, right? I mean, to me, from a computer science perspective, this is the biggest breakthrough I've ever seen. And I felt like there was a very good chance it was going to become a very big deal, and that was worth investing time into.
Yeah, I mean, I can remember when I first kind of woke up to Bitcoin and actually, kind of grokked how big of a deal it could be. But that was 2017, and a lot more education and a lot more information had really been spread about it. But I kind of want to go back to your vision for Bitcoin. Back then, this idea of hyper Bitcoinization was kind of like a fresh idea. Is that something that is like relevant now today to like think about Bitcoin being adopted globally and becoming like this general standard for money?
Yeah, well, it seems like it's happening. I in all these years, I've never really changed my perspective on Bitcoin, and that thought that it could become, it could completely reform a foundation for the financial system globally. I think it very much has that potential. I'm probably more bullish on it today than I was back then, simply because we've seen a lot more. It's survived. It hasn't, I always used to say back then, it's either gonna, if it sticks around and it just works, it just does what it's supposed to do, it's almost inevitable that it's gonna, sort of eat the traditional financial system. And I think having now more than a decade, 12 years of history behind it, it seems even more likely that that's going to happen. So, I forgot exactly what the question was, but that's kind of my thought.
No, I think that was a good answer. I was just kind of asking, like, is the idea of hyper Bitcoinization still relevant, after you've been kind of watching it for 8 years? But I think you hit on that.
Well,
And
that
I
hyper
agree.
Bitcoinization concept, idea, I don't think it's fairly recently that that's been a thing that people talk about. I think back then it was more like, here's this new thing. How can we make it grow? How can we make it become relevant? And you felt like if the system worked, it's inevitably going to be a great store of value over time. And if it's a great store of value over time, people come to trust in that, then people are just going to find ways to use it. And that growth leads to more adoption. I still don't think we've hit that mainstream adoption yet, but it's getting there, and it seems inevitable.
No, I actually contend that most people are not bullish enough because they think we're actually further along in adoption, and I think we're much earlier than even some experts say we are.
So I always tell people, when I acquired my first Bitcoin, it was at $1.10, and
Wow.
I the funny thing is that Bitcoin had just hit $1, right? It had just reached dollar parity, and that was made all the headlines and all the tech pubs and whatnot were talking about that, and but at that time there were people out there that were like, I missed it, I'm too late. If you can believe that. So I tell people that story today. I'm like, no, you're still very early. It's still very early in Bitcoin's history, and you're not late at all. If anything, you're still early. So yeah, it's hard to imagine that people even back in 2011 thought that they missed the move and it was too late to get in.
Yeah, and I would contend we're still in that paradigm
Yeah.
of Sats being unfairly cheap, especially for fiat. So you mentioned that throughout Bitcoin's 12-year history, we've seen hyper Bitcoinization kind of happening, and we've seen trust build, and Bitcoin as a store of value kind of become cemented.
Mm-hmm.
When I joined Bitcoin, it was in 2017. Obviously, that was a very contentious time, and there was a fork kind of battle happening. I'm very
Mm-hmm.
curious, like, what your perspective on like kind of like the lessons of uh, scaling Bitcoin, Bitcoin Cash, and
Yeah.
what kind of unfolded from that.
Yeah. Well, at the time you had miners who were not wanting to deploy SegWit. And then you had the developers, the core developers
And
that
SegWit's an
didn't.
upgrade. Is
Yeah,
was an
the
upgrade
SegWit.
to Bitcoin, right?
Yeah, SegWit was a soft fork upgrade to Bitcoin. Um, so you had miners on the one hand that were very reluctant to signal that they would start enforcing SegWit's consensus rules. And on the other side, you had the core developers who did not want to do a hard fork to increase the block size. But you also had, not too dissimilar to what we're seeing recently in the fee market, you had transactions costing $20 and up. And at the time, we at BitPay, we were, under a lot of pressure to add other blockchains, namely Ethereum. Our competitors were adding it, our merchants were asking for it, and we were still a Bitcoin only company at that time. And so we felt like it mattered a lot for us to kind of get involved in that. And, they had the whole New York agreement. They came up with this plan for SegWit 2X that would do both the SegWit as well as a doubling of the block size. And SegWit itself was an increase in the block size. SegWit was a large amount of code change, which I think made people nervous. But at the same time, the core developers were like, okay, if you double the block size, that's a hard fork. It's inherently divergent. You're going to have two blockchains after that. And there's a lot of questions it raises about governance, right? If you can force everybody to accept a doubling of the block size, a consensus rule change like that, then what does it say about decentralization and governance and everything? And so it became this huge war that you can go read about and kind of study. We could go on and on, about that. I think, from our perspective, it felt like the community was going to just divide, and it was, SegWit 2X was this opportunity maybe to keep everybody on the same blockchain for at least a little while longer. But at that point in time, Bitcoin was big enough that doing a hard fork, or even you could argue SegWit, making a big change like that to the system was not a good idea, because there's a lot of value in systems that are stable and well understood, and people can build around that. But if you go around changing it every year or two, then it becomes more fragile, and so anyway.
Absolutely. I mean, that's one of the biggest differentiators between Bitcoin as we know it today and pretty much all of its competitors.
Yeah, I mean, if you can hard fork, like you can force people into a hard fork like every 6 months or a year, then that's not I mean, that system has to be centralized to some degree, to a large degree.
Mm-hmm.
Yeah, and in the early days, there were changes made to Bitcoin. There were hard forks, some out of necessity because of a bug or whatever. But that was when it was much smaller. And I think you get to a certain point, to a certain stage, you need to stop changing it.
Absolutely. And, there was a lot of like that fight in 2017 got very emotional, and I don't
Yeah.
necessarily want to bring up any of that. I'm just trying to understand, the learnings. And even back then, I don't think, people think Bitcoin governance is clear today. It's not clear at all today. No one knows how it works. And back in 2017, it was even less clear, right?
Yeah.
And there was a lot of experimentation elsewhere. A lot of what we learned about Bitcoin, I think we learned in 2017 and 2018 in terms about the dynamics of the game theory of the system.
Mm-hmm.
I guess how has your mind around hard forking as a viable method kind of changed through that experience?
Well, I think a hard fork has to be just done. Like, advocates of that fork need to accept that they're going to create a fork and not try and force everybody on the same. There's going to be two blockchains after that fork, right? And you just have to accept that there's going to be two blockchains. The market will sort it out, and not try and force people on one side or the other. I think soft forks. What I also learned in that during that period is that soft forks have the potential to be very insidious. So you could almost change anything about Bitcoin through a soft fork. And of course, you have to have miners cooperate to start enforcing, the rules of a soft fork. But, in the future, people should, I think, be, very critical of any soft forks and cautious about them. Because there could be some unwanted changes and undesirable, or there can be unanticipated side effects through such.
100%. I
But
mean,
on the other side, like doubling the block size, the viewpoint of people advocating for that were, like it's a one-line code change, sort of. It is a one-line code change, but then you have to manage that forking process, and that introduces a lot more changes and code changes that have to be implemented to sort of manage that process. As they found out, as they were trying to start to build the version of the client that would navigate that SegWit 2x transition, it was quite complicated, actually. But
totally.
I think but the other thing about like anything like that, like doubling of the block size, even the SegWit, which expanded the block size, it sort of changes the contract that the system has with miners, for example. So if you double the block size, you're now all of a sudden creating more space in the blockchain, so that can have a very big impact on the fee market. And so you don't want things like that being changed out from underneath people, especially miners who have deployed tens of millions of dollars worth of infrastructure in these warehouses to mine, and now all of a sudden you're changing sort of the rules. It's almost like changing the 21 million Bitcoin limit.
Yeah, I mean, I was going to say, I feel like now in 2023, we're almost reliving a lot of those lessons again. And there is a lot of
Yeah.
heartburn, even about SegWit and Taproot, which have, the two most recent soft fork updates,
Yeah.
because they have enabled people to put non-transaction data on Bitcoin, and some Bitcoin best practitioners, as I call them, really hate that. So
Okay, but
there's
we've
some
been
heartburn
having
about how that works into the future too.
yeah, but we've been having that debate forever. Like even back in 2011, we were having the debate about putting data in op return, and then they shortened the amount of data you could put in op return, which I'm not sure what that accomplishes, because you just spread the data over more transactions. But yeah, it's funny to hear this come up again, but it's been there forever, and it's like okay, you have a choice. It's either you're going to have a censored centralized blockchain, or you're going to have a decentralized censorship resistant blockchain. Which do you want? If you want the decentralized censorship resistant blockchain, then people are going to be able to put whatever data they want in that blockchain, you know, and I don't know that. So inscriptions, you know, they're utilizing some new method to do it that was introduced with Taproot. But I don't know that fundamentally anything is different about that from when you could do it with op return, right? So,
Yeah, I mean, I think the difference is that SegWit made a block or a SegWit discount for the
yeah,
witness data, and
yeah.
then Taproot kind of enabled some new stuff. So I think it's just the fact that there was maybe unintended edge cases, or edge cases that, you know, people who were supposedly thinking through all the edge cases and were so confident they didn't see, and it's almost like an emotional
Well,
backlash to it. But I think it's also a good lesson. You know,
yeah.
I would prefer there to be, you know, less harmful edge cases that teach us a lesson versus, you know, maybe something that could existentially, you know, damage Bitcoin.
Yeah, I'm not sure what argument people would make that it's any kind of existential threat to Bitcoin. I mean, sure, it raises the fees, it increases congestion on the network, but fortunately for us, you know, we went through that in 2017 and we built lots of infrastructure to deal with a congested blockchain and high fees so that payments
Mm.
still go through. But yeah, I'm not sure. I haven't heard any really good arguments about how that this could possibly be a threat. Maybe like if um, you know, some of the rules around the inscriptions cause you to do weird things with how you prioritize transactions that miners include. And you know, the witness discount you mentioned, well, that's an interesting case. You know, the you know, those rules are really just conventions that are built into the software that miners follow just because they run the out of the box software. But miners could decide to, you know, charge the same amount for the witness data as they charge for every other byte in the system if they wanted to, and then that would just change which transactions they select to be put into a block. And I guess you would do that at the mining pool level, and then just kind of tell people, okay, we're going to charge the same amount for this data, you know, this witness data as we charge for regular data, and we're going to prioritize the transactions this way. And you know, miners would be free to do that. That's not really a part of consensus. It's part of convention built into the software.
How
But
closely are you kind of following this like the recent kind of
yeah,
drama on the internet?
I don't follow it very closely at all. You know, I hear bits and pieces. I've watched some podcasts and hear people talk about the pros and cons. But to me, it really just is the same argument we had back in 2011 about op return at the end of the day, with the caveat that maybe if the inscriptions and the rules about those transactions could fundamentally alter miner behavior in ways that made the base use case of Bitcoin, you know, for payments and store value, not work. But as far as I can tell, it's worked just fine through all the congestion. It might be a little more expensive, but it's worked just fine.
So I want to pivot to something you mentioned, which is that, you know, you've seen a high fee environment, and
Hmm.
because of that, BitPay and other you know, other players in the space have, you know, built solutions in order to scale payments out. I'm kind
Yeah.
of curious, you know, what is your perspective on Bitcoin as a payment solution and competitor in that realm,
Hmm.
and how does Bitcoin scale to actually serve the world for that use case?
Yeah, well, it's all you always have the question of what kind of payments are you talking about? If you're talking about high value settlement type transactions or people making large purchases, you know, Bitcoin works great. You know, the fees there have never gotten to any kind of point where they're any threat to that use case, and that's for the on-chain payments. Um, but then you also have Lightning. So we added Lightning a couple years ago to our invoices so that Lightning wallets can pay those invoices using the Lightning network. And, you know, we've been continuing to experiment and work on that, and, you know, have plans to do more with that in the future. And Lightning seems to work. You know, it's just been, uh, you know, I won't say it's not been a lot of effort to get it working, but now that we've got it deployed and working, um, it seems to be fine. And I think there's some risk on Lightning that you know, it reminds me of like the DNS system that is sort of what I would describe as distributed, but could have centralizing forces on it. But that's okay, because I think you can always fall back on the base chain. You can always spin up new routing nodes to take some load off of existing infrastructure that's become more centralized. So I think it's going to be okay in that regard. But Lightning can handle those tiny payments, and the real hard part about Lightning is working out the usability of it, especially if you want self-custody and you don't want to just depend on a third-party provider to run your Lightning node and store your Satoshis. That is a big challenge, and I haven't seen any great solutions to that yet. But I also think Lightning has some other potentials there. I've seen some projects working on doing like sort of chat over the Lightning network. So you have this built-in network of nodes that are making these point-to-point routed connections. And I always thought, what if you could run TCP over top of those nodes and also pay for setting up connections, transmitting data? So you could pay in Satoshis for data transmitted over the Lightning network. And you could host websites over that network. You would solve a lot of the problems that the internet has today with things like DDoS attacks, and DDoS would become a thing of the past in an environment like that, because you're having to pay for the bandwidth you're sending and the traffic that you're sending to a website. And as it gets more congested, either it becomes bandwidth constrained and fees go up, and no DDoS, right? You're only receiving the traffic that your infrastructure can handle. So I think there's a lot of potential for Lightning, as a network. It could do a lot of things, and especially when it has a payment system built in at its foundation.
So you think that Bitcoin scales through Lightning right now? Do you think that is that fair to say?
Yes. You basically have infinite scalability of payments through Lightning.
So how is BitPay planning to build with Lightning versus, I guess, other blockchains moving forward?
Yeah. Well, so back in 2017, we were a Bitcoin only company, but we, like I said, we were coming under a lot of pressure to add other blockchains. Ethereum was the main one at the time. And our merchants were demanding it, our customers were demanding it. So we've added a lot of chains and a lot of coins over the years because of exactly that, because our customers want it. And right or wrong, if your customers want it and there's a market for it, I think running a business, you have to serve that market. You have to consider that market. And we've been very successful in rolling out support for new blockchains and supporting those communities. And, we will continue to do that as well. I think there is some debate. Does Lightning take over market share, or does another blockchain take the load off of the Bitcoin network and people just go use a Litecoin or something? The market will decide that. I think Lightning is a great technology and we should do everything we can with it. But it's possible users could decide that they'll just move some of their activity over to something like Litecoin.
Yeah, I mean, I don't necessarily know if there's like the altcoin thesis is something that vibes with me, but I can definitely see the payment use case being dominated by stablecoins, and I think that we're already seeing a lot of that globally, or right now. What are you seeing on the BitPay platform in terms of maybe let's call it smaller payments? What's the breakdown between Bitcoin on Lightning, stablecoins, other?
Yeah. So stablecoins now are probably 25%, somewhere in that neighborhood of our volume. And I think they're great, but I see potential problems with them going forward. If you talk about US dollar stablecoins, well, now you have companies out there creating US dollars in this new format, and they're not within the Federal Reserve system. So I think that's not going to be tolerated by the Federal Reserve for very long. So, I mean, they're going to want those, whoever's doing that, or if they want to introduce their own CBDC, it's going to have to be within the Federal Reserve system, if that makes sense. If you take a look at like Tether's been creating US dollars, and there's not a lot of transparency in what's backing those dollars. So it could be that they're running a fractional reserve, and that's something that is an activity, at least as far as U.S. dollars are concerned, that is reserved for member banks of the Federal Reserve System. So I don't know what the future is going to hold for stablecoins, at least U.S. dollar stablecoins. There's probably going to be, my guess would be, some legislation, some regulatory action that says, okay, if you're going to do dollars in this form, here are your requirements. Those requirements are going to be very much like running a bank. But they work, and you eliminate a lot of the issues around the price volatility involved in payments, especially in the U.S., where you have capital gains that you've got to track. If you have gains, you have to pay taxes on them, and so it solves a lot of those issues. But I think those are also solvable issues with Bitcoin, and it will eventually, through good UX design and automatic tracking of capital gains and whatnot, we can solve those issues in the Bitcoin form. As far as other blockchains, interestingly, we've seen Litecoin payments rise quite a bit, and they're much smaller payments than we see on Bitcoin, but they're getting to a point where the number of payments that people are making, not in terms of volume, but just the times people use Litecoin, is almost reaching parity with Bitcoin on our platform. So that's, I think, pretty significant. So, we are seeing good adoption, of Litecoin.
Interesting. Litecoin is something that I haven't even thought about since 2017, really. So, I've kind of just been ignoring it. I guess yeah, I don't want to stick on the altcoin talk too much, but tell us a little bit more about the nature of the Bitcoin transactions that are happening. I know it tends to skew like high value items and products, but I'm kind of curious, what are you seeing on both ends of those markets?
Yeah. So when the price, hits new all-time highs, people tend to want to buy things, and they do buy luxury goods, cars, boats, jewelry, things like that. That's what they tend to be buying on our platform. And that's always been the case. I mean, that's been the case for, ever since we've been around. But then you see, and the other side of it, when the price declines, our payments volumes decline. So we've in recent years been focusing a little bit more on the hodler side and trying to add, enhance our wallet, add the features that hodlers would want. And we've got more things on the roadmap as far as that's concerned. Integrating the ability to buy crypto directly from your wallet. So that gives us, better revenue streams on the other side of the equation when the price drops. It's usually the biggest activity we see in terms of people wanting to buy, Bitcoin and other crypto, is usually at the beginning of a sort of bull market. It's not, once it's reaching its peak, volumes starts to tail off. And then when it's on the down slope, it's, people are trying to buy and trying to catch the bottom, but the volumes aren't quite substantial. It's just sort of in that upslope, when the price is ramping up, that you tend to see the most activity. And that's both people accumulating Bitcoin as well as spending it.
Yeah, I mean, that's really interesting. I can think of a lot of reasons why it's the case. That's kind of like it's a good signal for the beginning of the bull run is those volumes. I guess with that being said, are we entering into a bull run yet, Stephen, or do we have more pain to go?
I mean, I always hate making price predictions, but I do think there's I mean, it almost seems like we're setting up for a perfect storm. From a macro economic perspective, you're starting to see the Federal Reserve ease off of the interest rate hikes.
Hmm.
I think
They
something's going to break.
paused this
Yeah, and
past
we
week.
saw the banks having issues a couple months ago, and now all of a sudden, and Bitcoin held up and actually went up in price as a result of that. So I think that's making people view Bitcoin a little bit differently. I think a lot of the analysts out there that just thought Bitcoin's going to trade with the stock market are now seeing it um, separate from the stock market a little bit, and it's not just a pure risk asset. And I always tell people, I think, and this is not financial advice, but I think of Bitcoin as, in the short run, it trades like a risk asset, and in the longer term, it trades more like a risk off asset. And I think it's demonstrated that over time. And you look at just the history of the cycles. So you have that macro environment sort of setting up for later in this year, maybe even some easing, and potentially return of inflation in combination with the halving coming up next year. And then you have other things like on Friday, BlackRock announcing that they're going to launch the ETF. So I think it's almost a perfect storm for setting up another Bitcoin bull run. And if you just look at history, timing wise, it lines up with what Bitcoin has done historically. So yeah, I kind of have been. I would not be surprised to see Bitcoin trade up north of 250 to 500,000 by 2025.
I know my wife would like that. That's for sure. So no, well, the reason I just kind of asked is, are we starting a bull run? Is just because I'm kind of curious what the volumes are telling you. Are the
Yeah.
volumes on BitPay indicated or not? So it sounds like we're not quite there yet. I personally, I think we're still in. If I were to think back to 2019 when we kind of had that rally up to 14,000 and then
Mhm.
back down to some painful lows,
Yeah.
6 to 3K. I
Yeah.
feel like we may be in that kind of a rhyme in the cycle, but
Yeah.
who
I
knows?
agree.
That's just my gut feeling.
No, I agree with that. I also tell people doesn't mean it won't trade down to 15,000 before it gets to 500,000.
No, absolutely. And just to kind of stick on the cycle talk and focus on BitPay as a business,
Hmm.
Bitcoin Magazine is a business operating in a bull and bear markets.
Yeah.
BitPay has done it longer and potentially and arguably better than pretty much anyone else out there. How do you navigate that, and how do you find ways to anticipate the growth and then find ways to kind of anticipate the declines?
Well, yeah, having been through it and having made mistakes, not navigated it well in the past, you learn from that. And I think when the market's in the midst of that bull run, you just don't get ahead of yourself, and you kind of plan for the next downturn. And it is cyclical, and it's proven to be cyclical. So you just try to not get ahead of yourself, right? Knowing that tomorrow it's a different day, and that the price of Bitcoin may be quite substantially different the next day. And just and another thing I think a lot of companies in the space have not done well is they take a position in the asset, and it goes up, and now all of a sudden they do a bunch of hiring thinking they're going to have all this growth that then doesn't materialize. Maybe they have a lot, maybe a lot less, but they don't separate their investment in the asset from the profitability of the operations of the business itself, right? And that's what we tried to do. We completely isolate what the day-to-day operations, the expenses that we have with BitPay, the profitability of it from any kind of investment that we have in Bitcoin, and we think about those very independently.
I mean, it sounds like excellent advice. Don't get ahead of your
Hmm.
skis. Don't outgrow yourself. If you're gonna hodl Bitcoin, make sure that you're at least managing your expenses and you're treating it. I think you should just denominate whatever you're gonna pay your expenses in. whatever, you should just hold whatever your expenses are denominated in. So as much
Yeah.
as I love Bitcoin, if your expenses are denominated in USD, you should probably think about holding that, at least for your known expenses. But yeah, I think that's great advice, but it's not easy, especially when you're the bullish, one of the most bullish men in the world on Bitcoin. How do you
Yeah.
kind of, not get ahead of your skis when things are going to the moon for the first time? When you hit $1,000 Bitcoin for the first time, you hit $20,000 Bitcoin. How do you, like, what kind of mental fortitude does it kind of take to manage that?
I would say mental fortitude that we've not always had at times. Uh, yeah, it's, I mean, you just, again, you have to think about that investment separate from your operations. And, it's just tempting. It's tempting to think. And the other aspect of it is, what are your competitors doing? Maybe with the price of Bitcoin running up, they're making huge investments and they're going to outpace you. And by virtue of that, and it's tempting to want to spend that money and to try and keep up with them, right? And that's not an easy thing to. You don't know exactly how much they're investing, what they're building, how good it is when it's coming out, and so you don't know. It's very difficult to judge how much you should be. And you can also say, well, okay, they're spending all that money, and then there's going to be a downturn, and then they're going to go out of business, right? So it's yeah, it's that competitive dynamic makes it difficult as well.
Totally. That's
Yeah,
a
I
great
mean, when the
point.
price is running up and you've got this investment that's doing well, it's hard not to spend that money.
Yeah. And in my short time in Bitcoin, I've seen both equations like yield winners.
Yeah.
The conservative player that
Hmm.
that didn't scale into the bull market per se. I've seen them win against their competitors that have done the opposite. And then on the flip side, you've seen the team that's raised money and scaled into a bull market, and they're the ones able to potentially take advantage, and then they have a massive advantage over their competitors. So it's hard to tell which strategy is the right strategy to take. And honestly,
Yeah.
timing is really everything.
Yeah.
Um, I want to kind of continue talking about Bitcoin as a payments vehicle. One of the biggest things kind of in the way is just the tax burden that is kind of associated with,
Hmm.
every time you spend Bitcoin, there's a capital gain or capital loss or some sort of more complex accounting that is kind of a burden on users. Is BitPay, involved in potentially trying to change that? Like, are you involved in Bitcoin advocacy in general?
Hmm. We participate in a number of different industry groups. On the subject of capital gains, I mean, it'd be great if they just got rid of capital gains. That would make it all a lot simpler. I don't see that happening in the U.S. anytime soon. There are countries around the world where they don't have capital gains tax, and you can make the argument that you really shouldn't because it creates it inhibits the efficient deployment of capital when you have capital gains tax, and that's efficient deployment of capital is beneficial to the economy and then beneficial to receivables by the government as a result. But I don't see capital gains tax going away. There have been efforts to try and have de minimis exemptions to capital gains especially when you use Bitcoin as a payment method. That's fine. I don't mind that. It doesn't make the software any easier though, because you still have to track whether or not you're below the de minimis exemption, in which case you have to track the capital gains and losses. So you need the software to do that, to help you with that, to avoid having to do it manually. And so it actually doesn't help the case as far as making. The only thing that would really help that would be to just get rid of the capital gains tax. Maybe just for, in an ideal world, things that are meant to be currencies would just not have capital gains tax associated with them. But again, I don't see that happening. I think that's unlikely. And so what we're left with is just working on the user interface, making it so that we can have software that helps people track capital gains and losses. And there's a lot of companies that are working on that out there. And we've integrated with a few of them in our wallet, but they basically pull in the data from your wallet, and they calculate, the ins and the outs from the wallet, and they can also tie into your exchange accounts and and calculate. It's a non-trivial problem, because you might buy crypto and bring it into a wallet somewhere, then you might move it to an exchange, and you acquired it in the wallet, but you sold it on the exchange, and the transaction that happened moving it from the wallet to the exchange, well, that should not factor into the capital gains and losses. So it's a non-trivial problem.
Yeah, and there's just a lot of gotchas, right? That while you're using it, you can make, even if you're full the best faith possible, a good faith actor trying to do their best. Like you said, like kind transfers, moving from one thing to another. There's a lot of areas where there potentially could be some sort of reporting mistake, and then who knows what that will lead to into the future, from a legal perspective. So it's definitely, I think it's tricky. It's something that we're going to have to figure out, at least in the United States as a country. But I'm optimistic too. We're seeing Bitcoin become legal tender and typically in other countries, and typically legal tender in other countries is kind of exempt from that. From capital gains, is treated more like a currency. So maybe there's a lot more potential of Bitcoin just being recognized as a currency rather than changing laws per se.
That would be great.
Are you kind of following what's happening, on the nation state level with Bitcoin adoption? I'm sure 2021 with the El Salvador announcement, I'm not sure if that surprised you or came faster than you expected, but I'm kind of curious on what your perspective is there.
Yeah, I mean, it was surprising. I mean, my thoughts on it are, first of all, what does it mean to be legal tender, right? Or declared legal tender? I think what it means is it has some kind of legal standing. There's always that phrase in the U.S. that the U.S. dollars must be accepted for all debts, public and private. And I think that's a legal thing, where if you have a judgment in a court that says you owe this person that much money, or this company owes that other company this much money, that dollars have to be allowed as the payment mechanism for settling that debt. So maybe in El Salvador, that's the case with Bitcoin, that you have to accept on a legal basis. Bitcoin has to be accepted for all debts, public and private. But I saw some language in there that said everybody must accept Bitcoin as a form of payment, which I don't necessarily like that. I want people to use Bitcoin because they love Bitcoin and they like Bitcoin. They want to accept Bitcoin, not because they're forced to. And I think there was some backlash in El Salvador over that. But on the balance, it's really interesting to see, all of the activity going on in El Salvador and people moving there. I haven't been there personally, but, just seeing some podcasts about what's happening in El Salvador with respect to Bitcoin. It's really exciting to see. And I'm really fascinated to watch how that develops over time.
To close it out, Stephen, I want to talk a little bit more about BitPay's product suite. So obviously, you're one of the first the first Bitcoin processors for merchants. But since then, built a wallet. You're building exchange services. I know your debit card is really popular for people who are trying to live off their Bitcoin. Talk to us about like the complete suite and what experience you're building for users.
Yeah, so you mentioned, what we're best known for is our payment processing services. So if you're a merchant, you can sign up, get a merchant account, start accepting Bitcoin and other cryptocurrencies from your customers. We also do payouts, so companies can utilize that to pay affiliates or in crypto, or pay their employees. We built it for our own payroll at BitPay, because everybody at BitPay wanted to get paid in Bitcoin, right? So we built it for ourselves and then productized it. So those are some of our company services. On the consumer side, we have the BitPay wallet. That wallet integrates with some services that sell crypto. So we make it, make a seamless user experience to buy crypto from one of those partners of ours and have it just show up in your wallet. You can also buy gift cards there. You mentioned the debit card. Our issuing bank has gotten out of the crypto business, so we're shutting that program down, and in the process of launching a new one with a new bank soon. And so there's a waiting list if you want to sign up. If anybody wants to sign up for that, they can go to bitpay.com and get on the waiting list to get notified about when that product is available. And then also within the wallet, if you need to swap from one crypto to another, we do have partners that we integrate with so that you have a seamless experience. And, if you want to convert some Ethereum back into Bitcoin, that you can use that partner and do it right in the wallet seamlessly. You can also, you don't necessarily need to have our wallet to buy crypto. You can go to our website and, put in whatever you want to buy, and we'll show you a list of different partners and options and their prices and whether they're available in your region or not. It's sort of like an aggregator for different services that sell crypto. So you don't need to even download our wallet to utilize that. Of course, if you have our wallet, it's simplifies some of the steps because the crypto is going to come right to your wallet. I think that basically covers it.
With the BitPay wallet, does the BitPay wallet also support Lightning directly?
No, not yet.
Okay.
That's coming. It's one of the main things we're working on. We're trying to do that in a way that's self-custodial. That's proving to be quite a challenge. But we'll figure it out. It's a challenge.
It hasn't been a simple solution.
Yeah,
for sure. It's like, I'm a heavy user, and there's like 4 or 5 decent options. When the fee environment was low, Moon Wallet was really cool because it was pretty much an on-chain wallet, and then they used atomic swaps to Lightning, but that's not scalable.
What do they call those?
Fees are high.
Submarine swaps.
Yeah, submarine swaps.
Yeah.
But I would be very interested in the solution that BitPay comes up with. If you can come up with something novel, it's been a tough problem. Yeah, Phoenix Wallet, Zeus Wallet, both interesting options. I think Zeus is for your node though. So
we that's another thing about BitPay invoices and paying merchants. We do a lot of testing with all the different wallets, and for a long time we tried to boil it down to just a QR code or a link that you hit that opened the wallet and you pay. And we'd like to get there one day, but that's a lot of that has to do with wallet standards and protocols and things like that. And so we backed off of that and just said, let's just figure out exactly what they're paying with, and you can put in your wallet. Your browser can remember which wallet you chose last, so it makes it easy for you to select that again. And then we do a lot of testing, so that if there's certain behaviors that certain wallets have that can cause problems, then we'll tell the user, hey, do the X, Y, and Z to avoid making these errors. But that takes a lot of effort. But we've tested all the different Lightning wallets as well. But we don't have Lightning in our wallet yet.
Mm-hmm.
We're working on that, and we do want to make it truly self-custodial, and not in any way dependent on any centralized service. And then one of the things that our wallet's always been good about is just the UX around setting up multi-signature wallets. So either where you want multiple people involved in a workflow, or it's one person, but you want the security of multiple devices, multi-factor authentication. So I would say that's and we're going to add additional features, that would appeal to hodlers, like hardware integrating with some of the hardware wallets, air gap signing, tool, non-GUI or command line clients for all of that as well, so that we can sort of minimize the amount of code that's involved in handling those private keys, so that it makes it more auditable. So we got
awesome.
a lot of big plans for the wallet.
Well, it's cool to hear the investment in non-custodial solutions, as well as a lot of the advanced features. So I know a lot of listeners of Bitcoin Magazine, these are the diehards who they're building Bitcoin in the bear and the bull markets.
Yeah.
Steven, it's been awesome to have you on the show. It's been great to ask you, about lessons learned. I think, all of us in Bitcoin, it's important to humble ourselves. We're so early and there's so much we don't know. And it's awesome to get to learn from someone like yourself who's, been building a business for so long. Want to give you a chance to wrap up with the last word.
Oh, gosh. I would say, with Bitcoin, I'm still every bit as bullish and optimistic as I've always been since 2011. It's a platform built for, stability and security, and I think it's the best option for a digital store of value, and that comes directly from the power of the computer securing that blockchain. So I think as a store of value, you won't find anything better.
Awesome. Well, I 100% agree. Excited to have you back on in a few, Steven. Hopefully there's more fireworks and we can tease it apart here on the Bitcoin Magazine podcast. Thanks again for coming on. To everyone listening, catch me at Bitcoin Amsterdam this October. We are going to be having an incredible time in Amsterdam, trying to orange pill as many folks from the Netherlands and from Europe as possible. But until then, we'll be back with another interview here at Bitcoin Magazine podcast. Peace.
Thank you, Miami, for the last 3 years in this amazing city. The whole world shut down, but Miami welcomed us with open arms. We want to show Bitcoin to the whole world. We are taking the conference on the road to set the stage for Bitcoin in a new city. Nashville. Bitcoin 2024 is coming to Nashville in Tennessee, a city that is known as a music and freedom city. Bitcoin 2024 in Nashville from July 25th to 27th.